Hello and welcome to the Trading Day right here, and we are coming to you live from our NGX studio. So definitely where I am right now, I can smell the money as the transactions are happening just in front of me there. But let's bring you the top stories that set your agenda now. Let's get a check on what's happening with oil prices. Now we're seeing oil prices ticked up in early Asian trade today, steadying from the sell-offs, from the previous day. We see Brent, that's rose about 14 cents to $74.75 a barrel. The WTI, that's the US grade, that's up 18 cents at $71.21 a barrel. Let's move quickly now to the Naira. Well, yeah, it's been bullish sentiment even in the parallel market and the official window. We're seeing again there for the NAFEX window, 1 Naira 86 kobo to fix at 1,503 Naira to the dollar. Analysts seeing a bullish trade right there in the FX market. A trading range between 1,505 Naira and 1,485 Naira. Just yesterday at the parallel market, we crossed the 1,600 psychological level. That's for the first time in a long time, and definitely that's some bullish sentiment there, even in the parallel market. To other stories now, the Central Bank of Nigeria has introduced new regulations allowing BDC operators to buy up to $25,000 per week from authorized dealer banks to address retail market demand for eligible invisible transactions. The guidelines detailed in a circular issued by the Trade and Exchange Department also include compliance measures aimed at promoting transparency and preventing potential misuse of foreign exchange. The new guidelines mandate that BDC operators must obtain their allocated foreign exchange from only one authorized dealer bank each week. This measure is designed to curb speculative practices and enhance regulatory oversight. BDCs found breaching this rule will face sanctions from the Central Bank of Nigeria. Additionally, authorized dealers are required to sell forex to BDCs at the current rate available in the Nigerian foreign exchange window. This ensures uniformity pricing across all the markets. So yeah, a lot to look out for in that market. To other stories now. Global technology giant IBM has been making clarifications on speculations of its exit from Nigeria and other major African countries. The company says that it will transition to an alternative operating model in select African countries. Under this new structure, it will no longer directly manage local sales and market operations, but will instead rely on MIBB, a subsidiary of the Midas Group, to oversee its business in 36 African countries. So you heard it from IBM there. They're not leaving, but they have a new model. Then it's still earnings season. The UAC, Nigeria PLC, released unaudited financial statements for 2024, showing a revenue of 198 billion naira. That indicates a 64% rise from the previous year and 109% increase in profit to 25.8 billion naira. Gross profit more than doubled, reaching 46.3 billion, up from 21.3 billion naira in 2023, with gross margin expanding from 17.7% to 23.4%. Commenting on the results, Group Managing Director Fola Shokpe Ishimoju attributes the outcome to the hard work, skill, and dedication of leaders across the group and their teams. Now we see the Minister of Budget and Economic Planning, Atiku Bagudu, says the additional figure of 4.5 trillion naira that has been added to the proposed 2025 appropriation bill was established by the committees of the National Assembly and the Economic Management team. The minister explains that the additional revenue will help support the diversification program of the federal government by putting more money in the solid minerals sector as well as infrastructure projects. Take a listen.
And the National Assembly and the Economic Management team continue to interface and interrogate all figures. And in that process, both the Senate Committee on Appropriations, Senate Committee on National Planning, Senate Committee on Finance established that we can generate more revenue by tasking all the institutions to do more. And the Federal Inland Revenue Service confirmed their ability to do more than what was submitted. Equally, the government-owned enterprises were it was established that they can contribute more revenue, as well as the custom service. So additional revenue amounting to over 4.5 trillion was established, and this was taken to His Excellency Mr. President, because the beauty of the National Assembly Executive Corporation is that it's a harmonious relationship. So Mr. President was briefed on this additional revenue, and he consulted and he guided that this additional revenue should be used to further strengthen the Bank of Agriculture, Bank of Industry, support the diversification by putting more money in the solid mineral sector, as well as projects under the Renewed Hope Infrastructure Fund.
So there you have it. It's going to be a higher budget in 2025. And to help us break this all down, we have joining us right here in the studio Mr. Bismarck Rouhani, CEO of Financial Derivatives Company. It's good to have you on the show, sir.
Good morning. It's good to be in the Central Business District of Nigeria.
Yes, we're right where the money is changing hands and where the asset classes are moving from one buyer to the other.
Yeah.
But Mr. Rouhani, it's official now. The amount we saw before has increased.
So 54 trillion naira.
54 trillion naira. That's the new spending. I guess we should be rejoicing, champing out at this point.
Well, it's always better. Let me put it this way. It's better to, more is better than less when you're receiving.
Right.
Okay, so that's the way to look at it. Now, what it does mean is that there's a 2.5% increase in the amount going to be spent. And you heard the minister say solid minerals and capex. Good. Secondly, the sources of this revenue increase are from the Board of Customs and Excise, Federal Board of Inland Revenue, and one other agency. Good. But what we have to understand is that the price of oil in the budget is $75 a barrel. You just said it now that the price of Brent has gone down below 75, it's about 74 something. So what does this mean? It means that the economy and the government and the policymakers are in a reflationary mode, and you're trying to reflate the economy, create jobs, and hopefully improve the welfare of the people. That is what this is all about. And it's interesting because what would have happened normally, there would be a supplementary budget because we have more money, right? Or you use the increased revenues to actually reduce the deficit. What has happened? The deficit is still the same. The revenues have increased. The activities that are going to be, where the expenditure is going to targeted expenditure, solid minerals and capex. Usually capex has a multiplier effect. Recurrent expenditure has probably a leakage effect. So it's not a bad deal. And you have to understand something. In the budget itself, the president has said the assumed exchange rate is 1,500. We are now officially at about the same level. So in reality, we are moving more towards equilibrium. The real challenge is how do you translate this reflation into improved welfare of the people? How does it become lower prices? How does it become higher income? And how does it translate itself into...
But do we have to be worried about stoking inflation further?
Well, the inflation figure which we have as of now is still roughly about 34% plus. And the inflation numbers officially should be coming out on the 15th of February, a day after Valentine's Day.
Right.
Right? So we are hoping that there'll be a dirty February, all right? So that,
dirty February. Yes. Wow, that's another one.
Yes.
That's another one we need to look out for.
Yeah. But what we think is that inflation has begun to moderate. If you look at the prices of goods, generally speaking, apart from pepper, every other thing has actually come down. We've seen milk down, we've seen eggs down, We've seen bread down, we've seen flour down, we've seen rice down. And therefore, in terms of nominal prices, but compared to this time last year, it's still higher. So you might see headline inflation slow down a little bit, but monthly inflation and food inflation will drop significantly. When I say significantly, a couple of points. Now, what does this mean? Why are prices beginning to decline at this time? 3 reasons. 1, there's consumer resistance. 2, we are seeing that people are switching, right? And 3, they have spent all their money in the dirty December.
Right.
And they are broke in January. And people are now preparing to go for the lesser Hajj, which is coming up at the end of this month. So all of these things combined mean that there's less money in the pocket. Prices are sticky, but even though they are reducing, but people are not interested in buying much. So and also we've seen consumer sensitivity, where the price of petrol at MRS is $9.70. The price of petrol at Mobil is 10 naira more, which is $9.80. But if you go to Mobil, there's no queue. If you go to MRS, there's a long queue. 10 naira goes a long way when things are hard, and that's what we're seeing. We've seen a hard quarter. This quarter is interesting in the sense that you have the fasting starting on the early March, and we have Easter on the 21st of April. So, and that's in the second quarter. We also have the MPC meeting on the 17th and 18th of this month. So all of these things put together mean that there are some policy issues and signals that we as investors, we as financial intermediaries, we as analysts have to take into consideration as we go along. But it's interesting days are here.
Yeah, definitely going to be an interesting first quarter in 2025. Absolutely. But, with all we're seeing, so far, especially in the FX market, and breaching that 1,600 psychological level at the parallel market, good sign.
No, but these are technical, because you increase the amount going to the BDCs. The fundamentals still point to the fact that, yes, the Naira is almost 27% undervalued because it's at, by PPP, it should be about 1,150 Naira or 1,170 Naira per dollar. Typically, frontier currency, the illicit premium is about 25%. So if you take 25% of 1,100, you're talking about 1,350 to 1,400. That's where it should be, right? But where it should be and where it is, there's a distance of almost 1,150 Naira. So, some other thing you have to look at, the pound sterling itself has virtually crashed against the dollar. The dollar has increased in value against a basket of currencies. So I wouldn't jump to the conclusion that we should start getting excited. We still believe that the Naira would trade in the parallel market between 1550 and 1620. We also noticed that the airline IATA rate of exchange is now at 14.95. That's very important because the January is the beginning of the low, what they call the low season. So airline tickets begin to drop, and IATA backlog, we are told, have been cleared, and therefore the airlines are not knocking us over. But we've seen some interesting developments. One, Emirates are back here, and we are seeing 75 to 80% load factor in the Lagos-Dubai route. We've seen Qatar Airways offering some discounts in the transatlantic routes. We have seen also that Delta put in an extra flight between Lagos and New York. So you have a daily frequency Lagos to Atlanta, and you have now daily frequency Lagos to New York, which I think will stop when the winter low season kicks in. So all of these indications are that business activities begin to pick up, prices are beginning to slow, government is trying to reflate the economy, right? But again, this is a great opportunity because of the Trump effect,
right,
to build into resilience and begin to work hard. So I think the economy is creeping out of its current slow mode. The hope is that we go from a vicious cycle of poverty into a virtuous cycle of near prosperity.
Near prosperity.
I don't want to get ahead of myself. I call it near prosperity.
Near prosperity. All right, a great one. But definitely, I'm still wondering what's going to play out. When those high demand seasons come for FX. Do we see that kind of season in the first quarter?
Well, let me put it this way: the gross external reserves have dropped below you talked about the psychological resistance of 1,600.
Right.
We also have the psychological resistance of $40 billion.
$40 billion.
If I've depleted my reserve, but about $1 billion in the last 2 weeks, it means I'm supporting the currency. If I'm supporting the currency for technical reasons, right, and market sanitization purposes, then what happens after that, right? But to be honest with you, Central Bank has done a good job in terms of focusing on its core mandate, which is the mandate of price stability. I think we've seen that happen, but I don't want us to get carried away and excited, because there's a lot more work to be done. And quite frankly, we should be looking out for the inflation data that comes out, and the GDP data, and also the outcome of the reconstitution of the basket.
And all these will be rebased data that we're looking out for.
No, let's put it this way. The data will come out, and the methodology will be made clear.
Right.
I don't think that the Nigerian government is in a hurry to release data that people will question the integrity of the data. Because what happened with the unemployment numbers was that we saw unemployment technically come down from 33% to 4%, which was not credible. And ever since then, nobody has made any reference to those data points. So I think we have to be careful. We don't want to be seen to be playing with mirrors, all right? And the rebasing gives you an opportunity to do certain things. But again, we must separate or differentiate between the cosmetics, right, and the reality. We're in a world where there's too much cosmetic surgery already in the real life.
Right.
Now we want to take that to cosmetic economics. So we need to discount that, right? So after the face mask, we want to see what's behind, what the real face looks like.
And we'll definitely be looking forward to seeing that face. Thank you so much. Great having you.
It's a pleasure.
At your perspectives today, Mr. Bismarck Wani, MD of Financial Derivatives Company.
The pleasure is mine. Thank you.
All right, we'll take a break now. When we come back, we get some investment outlook. That's next. Do stay with us. This is Business Morning. And it's still early days in 2025, but the trading year is moving on quite fast at this point. And investors, savvy investors, will be wondering where they're going to be stashing cash into, in 2025. Some might be sitting on the sidelines, watching things, play out. But we always need to make that investment decision. But to help us unpack what to expect in 2025, we have Mr. Olatunde Amolegbe, the MD, Arthur Stephen Asset Management Company Limited. Join me right here in the studio. It's great to have you, sir. Happy New Year.
Thank you for having me, Ladi. Happy New Year.
So, it's a year, like I remember the previous years, when they started, investors were wondering, what's going to play out next? What is that investment class that I should be looking out so I don't miss out, on some of the profit, coming up? But talk to me about economic policies that will shape the investment landscape in Nigeria in 2025.
Okay, thank you very much. Again, in 2025 is always going to be all about inflation.
Right.
What are we doing to continue to curb inflation? Because there's no analyst that will argue that 34% inflation rate is acceptable. So the things we're doing to ensure that we try to bring that down will be crucial to any investment that anybody is making for 2025. So how do you ensure that those factors that are contributing to inflation are curbed? issues such as FX market instabilities and the likes, issues around energy costs, issues like around inadequate infrastructure, issues around insecurity. How do you ensure that you put in place policies that controls all of that and gradually starts to bring down your inflation? If your inflation starts dropping, then various sectors that are impacted by these inflations can start easing a sigh of relief. So sectors such as the industrials, such sectors such as consumer goods sector, that have been heavily hit by issues around FX devaluation, issues around high interest rates, can start easing a sigh of relief, and we can start seeing growth, across sector. What has happened 2024 is that if you look at, yes, our GDP did rise 3.4% thereabout. It's projected to go up to about 3.5% for 2025, but what we saw was an uneven growth across sectors. So you saw sectors such as the oil and gas sector growing, you saw such sectors such as the finance sector growing, particularly in 2024, but the industrials, the consumer goods, those suffered significantly in 2024. But if you continue with policies that stabilize the FX market, for instance, and possibly start to bring down the exchange rate a little bit, if we are able to continue in the trajectory in bringing down energy costs, so the pump price starts to come down, and hopefully that impacts transportation too, then the transport cost comes down. Insecurity, we get a handle on that so that farmers can go back to the market and produce food. Food inflation starts to come down. Then those kind of sectors can also benefit. Then we can now see a relatively even growth across sectors in the economy, and then the kind of
with the picture you painted, it seems like you're just working with a console, and you have the volumes for each of these macroeconomic indicators, and you just pull down inflation, pull down the exchange rate.
Yes.
It would be great if it was that straightforward, but we've been seeing action from the Central Bank of Nigeria. How are you seeing, some of the moves, so far, from CBN?
I've said it in the past. The CBN's business isn't to be allocating resources. The CBN's business isn't to be choosing winners and losers within an economy. The primary focus or the primary duty of the CBN is to stabilize prices in a market economy. All right, so I guess we are a little bit lucky now that we have the management at the CBN returning to that focus of price stability, because we're in a market economy. We are supposed to give even chance for all the players in the economy an opportunity to thrive. But when you now have a situation where the CBN took on the role of allocating resources, selecting which industry or which sector they are going to bail out, or which sector they are going to stimulate, that is not right. But now we are back to the traditional role of the CBN, which is price stability. So they are putting in place measures that stabilize the FX market, that ensures that every player in the market has a fair shot of succeeding. Then we're going to see growth. And the truth of the matter is that some of the challenges we're having now did not start overnight. Some of the policies they are putting in place are not going to solve the problem overnight either. So we're going to have to give them time and give them a chance to work themselves through the system and actually start to make a positive impact. So we are not going to expect the exchange rate to just drop overnight. It's going to happen. In fact, what we're going to see is a situation where we're going to achieve stability first, before we can now start seeing maybe a strengthening of the naira. Energy prices is going to also become stable before we can see a reduction. All of that, along with some other fiscal issues, will ultimately start impacting inflation. And if inflation starts to drop, then we should see a positive impact on the economy, and more importantly, positive impact on the lives of the citizens.
And with all of these headwinds were with us in 2023, 2024, but it seems investors were still better off. At the end of the day, even though the macroeconomic headwinds were quite negative, investors still can't cashed out, and would they get more, this time, seeing that, most of these indicators actually, go in the right direction? On what sectors will profit, in 2025?
If you look at, if you came back to 2024, as I'd mentioned, because of the uneven growth, even in the market, you will see that the gains, though, if you look at the chart, virtually all the sectors in the market recorded gains last year. But if you look at it, the gains were uneven. So, for instance, the oil and gas sector, was topped the market in terms of, price movements, followed by the finance sector. The expectation is that with some of this, the positive effects from some of these policies, then we're going to see more sectors start to join in that, positive movement. So, for instance, the insurance sector, for instance, should be able to benefit in 2025. I've mentioned consumer goods sector. They've really taken a hit from FX issues, interest rates issues. By the time we start seeing stability in those fundamentals, then the consumer goods companies should also start doing well in 2025, hopefully. And of course, the industrials, like the Dangote cements of this world and all of that, should also benefit from those positive.
Because with some of the results we saw before, the FX losses were huge.
Absolutely.
So, at some point, they might start to come down, and maybe, no more FX losses.
So, let me give you some typical example. If you look at the top gainers and the top losers in the chart for 2024, you will see companies such as MTN, such as big companies, huge companies, crucial companies to the economy, such as MTN, such as Nestle, all right, in the losers column. That typically shouldn't be the case. But of course, the issues of huge FX revaluation losses and huge finance costs, affected those companies. If you get a handle on some of those issues, then you could see those sort of bellwether companies starting to show their real value.
And we've seen MTN already moving in that direction, somewhat, at this time.
Absolutely. With the adjustment in tariffs, that coupled with the stabilization in terms of, their general finance cost, should see them, doing much better in 2025.
Right.
Maybe not necessarily reaching their full potential this year, but we should see them doing much.
All right, we're already seeing action, happening, even in the global space, with the tariff wars at this time. I'm sure investors are just watching and waiting to see where they will strike at this point. But so much, I'm looking forward to it. I guess it's going to be a very interesting one.
Absolutely.
So thank you so much for sharing your thoughts with us, Mr. Olatunde Amolegbe, MD of Arthur Stevens Asset Management, joining us right here at the trading floor. Thank you so much.
Thank you for having me, lady.
All right, so that's it from me on Business Morning. I'm going to hand things over to the Sunrise Daily team. We'll be back at 1 p.m. to give you updates on what's playing out with most of the markets we track. Bye-bye.